Welcome, everybody, to this session of the Northwest Intentional Communities one night a month where we get together and we have an educational presentation over different variables about intentional community. So tonight we have Pat Park interviewing Hoa Pantastico. Did I get it right? It's such a cool last name. It's like my last name, a little Jigrin. It's tough. So anyway, I would like to now hand it over to Pat to go over what we're going to be discussing tonight, and he can address questions as they come in, or you can save them to the end and I'll kind of navigate them throughout the chat. So, Pat, I will hand it over to you.
Okay, thanks, Sarah.
Thanks for being here.
Yeah, so what we're doing tonight is a continuation of a December presentation where I was talking about affordable housing financing. And we went through a few different financing schemes that were being used. And tonight, thank you, Wa, for being here to share your experience with a new model that we wanted to know more about with Frolic. So to get us started, what I wanted to do was I wanted to show Frolic's, there's a good intro video on how Frolic does its work. And so give me 1 second and I'll run that video. It's about 4 minutes. And let's see here. Okay.
Displaced neighborhoods. And what our vision is that that process can be more graceful and kind to add density. But my name's Josh. I'm a co-founder of Frolic. This is our office space here in Seattle.
My name is Tamara Knox. I am the CEO and co-founder of Frolic. We build small multifamily homeownership projects that allow individuals and families that don't have a huge amount of savings to purchase a home and start building wealth.
Our projects are cooperatives. That allows the down payments to be very low in our projects, between $10,000 and $30,000.
Right now is this incredibly precious moment where cities are shifting what is allowed to be built and they're changing zoning to allow for more density. And if that is the only thing that's happening alone, the current capital markets are going to be building what they know.
What we've seen historically is that it can massively displace neighborhoods. And what our vision is that that process can be more graceful and kind to add density, but in a way that doesn't displace the existing residents in those neighborhoods. The way that we're building our projects is that we're partnering with homeowners in these communities and building multifamily cooperatives on their land, which they live in, as well as their children and community.
This is where I grew up, and all of these houses that you see here were all Black owned, and that is no longer the case. What happens in a neighborhood like this when displacement happens is you lose community. I bought this house when we were 23 and decided that we would develop it for our family to grow into. So I am very, very excited to be working with Frolic because they've totally embraced my ideas and my community. And I think that that has been the difference in our partnership.
Everything begins with someone who owns a home. They have the equity in their home, the value that's sitting inside their home. They then contribute that to the development process.
And what they need to get a construction loan is usually $300,000 to $400,000, and we're sourcing that from impact capital. So we're really allowing the homeowner to use the value that they have and to leverage that in order to get a construction loan, to take conventional sources of money, bank debt, and build a project.
Initially, I was going to develop this property into townhomes. The more I sat with it, the more uncomfortable I was with putting these super duper expensive townhomes in this neighborhood.
I really love the idea of community, right? Of bringing a bunch of people together to live in this communal space. So when Mary spoke about it, it was really a no-brainer.
We're here today doing a meet and greet and introducing the project to the community. We're offering affordable home ownership units to people in the community who are looking to stay in the area that they are native to.
Wonderful project. First thing that hits me is that it solves a few problems that communities have. One about density, space flexibility, access to green space. I hope ultimately that our communities that are getting displaced here in Seattle, in the Central District, Beacon Hill, get access to
it's all about creation of community and interaction and providing places for gathering as well as kind of places for privacy.
We are in Beacon Hill.
Kelly, Milvia, and Ying and Brandon are building a project using our cooperative ownership structure on their land, where they have the design, they have the land, they have a lot of the capital, and they're using our model to piece those different pieces together.
So each family has a single child, so they get to grow up a little bit like siblings. Milvia and I are both single moms. It can be very lonely doing that. So having this kind of fluid quality of community it's just amazing.
Have 3 projects in development and 36 in our pipeline. The way that we think about scale is through replication. And we see in the coming years, adapting our model to different geographies and licensing out pieces of what we're doing to other organizations around the country to just help make it easier. What we see our work being about is creating that system to allow more people to do development and to allow more of these types of projects to come into being across the country.
So when I met the both of you, all I kept thinking was, these are the folks that are going to rebuild and lead with clear mission as well as logic and can do. This is a movement. We talk about being dreamers.
Yeah.
Dreamers are the future.
Were you able to see that okay?
Next to President Trump's tariffs, more and more are coming by the day, but what are the proven ideas behind this policy? One man has more insight than most. He is Ambassador Robert Lighthizer, who served as U.S. Trade Representative in the first Trump administration and is considered the architect of the president's tariff policy. And he's joining Walter Isaacson on tariffs and trade.
Sorry about that.
You got it. All right.
Okay, let's see if I can do this better. Okay, let's see.
As you're transitioning, I just want to say that it's hanging in my mind the very last sentence of that video, which was that dreamers are the future. Isn't that what she said? Something like that, to dream of innovative community is the future. So I'm really thankful to see so many people here tonight who are also dreaming of future for this. So thanks for being here.
Okay.
You got it?
Okay.
I see it.
Okay. All right. Well, thank you very much for all of you that have shown up and expressing your interest in tonight's presentation. Tonight, we are pleased to have Hoa with us. Just as a brief introduction, the last time we covered financing options, we covered co-living, LLCs, tenants in common, basically a co-buy, and limited equity co-ops. I also mentioned the legal hurdles and the financing hurdles that we have to go through in order to build affordable housing. And then we did a comparison of LLCs, TICs, and LECs. So tonight's agenda, we're going to briefly cover the problems and solutions with trying to get affordable housing done, especially from a market rate standpoint, as opposed to the affordable housing financing ecosystem, which is a totally different topic. This is really looking at it from a market-based system, and can we come up with a market-based system that can scale, as Josh had mentioned, across the country. And then you saw this YouTube video, and we will end with, I'll do a few slides here before we begin the interview with Hoa. Okay, so can you hear me okay, Sarah?
Yes, I can hear you pretty well. I'm seeing other thumbs up too.
Okay, great. So there's two big hurdles in doing affordable housing. One is the legal problems and the other is financing problems. The legal problems really boil down to the legacy zoning rules, which constrain the supply of housing. And that's why housing is so expensive, is because we're not producing enough of it. And a lot of this comes from the NIMBYism, which tends to favor single family. There's also been a limitation on how many unrelated parties can occupy a house. And zoning variances just take years to get done. So housing innovations require also a lot of promotion. You know, you got to work with the agency advocates, and as we have done in the industry, now we're getting some good legislation that's happening in tiny houses, ADUs, and micros. Some of the financing problems is that we're basically dealing with a legacy system that favors single family. And single family housing is backed up by the federal government. You know, there's a big secondary market for these loans to be sold. So when your bank makes a loan, they want to sell that loan into the secondary market so that they can recover the money or they can capture the servicing, but not necessarily fund the project within their own portfolio. So these programs that the Fed does is the reason why we can have so much housing for single family homes, but not so much for multifamily homes unless it's for rental. And almost nothing for co-ops, except for what's being done in New York and a little bit in San Francisco. And slowly now, you know, we here in Washington State are starting to get more active in that area, but it's still very embryonic. Mortgage financing, as you know, favors single-family homes. So does home insurance. And then you all know about the tax deduction. So lots of legacy systems to get through in order to finance housing. The smaller format housing, like tinies, ADUs, micros, virtually no federal secondary, and there's no federal secondary market at all. And there's little to no mortgage financing. There is financing for condominiums and insurance for condominiums. But that's about it. You know, you still can take the tax deduction on the condos, but that's about the extent that the Fed gets involved. You do have the low-income affordable housing programs, but these are primarily rental programs. Okay. What is nice about what has happened in the last 5 years, particularly, is that legislation in the state of Washington has changed quite a bit to encourage a lot more innovation in the housing space. So you now have new legislation that supports shared housing, as well as tiny houses, and starting to look at micros as well. The zoning has also started to loosen up so that we have higher density. And in the rental space, you've found, I don't know if you're familiar with the term apartments, but that was big about 6-7 years ago. And Seattle is known for really pushing the envelope on those apartments, which is basically each floor has one central kitchen, living, dining area, and as many as 8 units around that kitchen, living, dining. But again, that was restricted to rental housing. What is interesting lately is that with Frolic, they have broken the ice, so to speak, and they found a way to finance units with secondary kitchens, like kitchenettes. And they've gotten help from community banks, local community banks that are willing to portfolio those pilot loans, because again, there's no federal help on that. What is nice about our community with NICA is that we are almost a perfect fit for these types of shared housing structures because we tend towards co-living and co-housing, and we understand the social issue, the social layer of making that work. And Hoa will talk a lot about how that is happening or struggling to happen at the Frolic projects, because the Frolic projects are not necessarily co-living or co-housing projects, but they do touch on this a similar kind of design. And also because in NICA, everybody understands the growing social isolation, we have that advantage in terms of adopting the Frolic model. Okay, so Hoa, I put this up here on from a Frolic site, and this basically compares the conventional development work. Let's say that you buy a lot and you can put, say, 4 townhomes on it to replace the single family home. So total revenue is $4 million. The question is, how can you make that, instead of $1 million a piece, to something much less? And Hoa, do you want to jump in and explain how they do that?
Yeah, and hi folks, Hoa Pantastico here. I live in one of the units at the Frolic development Corvidae, and similar to this at Corvidae, we have, 10 units on 2 single family lots. And so, you're not trying to just put 2 units and kind of do that standard build, but you're putting in smaller units using ADU zoning laws to try to get more density in, while kind of fitting into the zoning codes. And then, of course, those smaller units cost less than a typical single family house would here. And you could see some of the number comparisons on the left. Average cost might be $1 million with some pretty significant down payments of 100 or 200K, versus the units here were, much smaller. We have units that range from 170K to 625. So a big range, but the down payments went down to like 3%. So it is much more attainable for folks to be able to purchase.
Yeah. Well, thanks for jumping in, Hoa. And by the way, Hoa, as an owner, would you mind telling us a little bit about yourself and how you made it towards this type of living? Just a little bit of background on yourself.
Yeah. So I live in Seattle, and I've been, in the Seattle area for most of my life. But the last several years I've been really interested in just the idea of intentional communities, community living. And for me, sustainability is a big value. But also, as I learn more about co-housing, the need of just community in general, I think, is really important. And I have a toddler now, so when I think about, how she's raised and wanting her to be in a safe place and also have other people, other adults, other kids to interact with, I think just all of that made a lot more sense. So that's how I became involved with the Puyallup Co-housing group. I know that Mike's here, Joni, Leslie, there's several folks here from that group, but was involved with that group and, started to learn more about co-housing and was really interested in jumping in. And this project was built finished the build in summer of last year. So pretty much tried to jump on that and said, hey, if I want to live in something like this, like let's give it a try while we have a young child and can really benefit. So really jumped in and moved in September. So not even a year in. Has it been 6 months? Yeah, it's been pretty new still, but so far it's been a good experience. A lot of learning.
Thanks. So can you tell us about Corvidae a little bit? I have a map here, and this little dot here is where Corvidae, you can see Rainier Avenue, Of course, Seattle, and here's the I-5, South Seattle right here.
Mhm.
And
Yeah, so we
Sarah,
are,
can you see that okay?
yeah, that little tiny dot. Yep, we're right off of MLK, very close to the light rail, pretty much, I think, 6 or 7 minute walk to the light rail. So a very urban location. And as I said, it's built on 2 single-family lots, and there are 10 units. And it's, yeah, this is great. So there's 2 kind of main buildings, and you can see on the left side, which is our west building, they have several units. So on the bottom, there's that bedroom flat, and that one is actually kind of fully contained. It has its own kitchen, it has its own laundry. That's one unit. Then there's the 4 units above that, and those have kitchenettes. And the area in blue is a shared kitchen. So it's a smaller kind of cafe kitchen, which has, the full amenities of a full fridge, stove, countertop, little dining area. And so those 4 units would regularly either cook in that kitchen or in their kitchenette area. And each of them have, kitchenettes with counter space and all of that. And then up top, you have a common balcony. Actually, behind that building, there's another unit that is an ADU. And so that one, again, is also kind of fully contained, has its own washer dryer, has its own kitchen, and is allowed to do that because of the zoning laws and how they developed it. And so on the west side here, you have 6 units. On the east side, on the right, you have the 2 units above ground. You have the blue section, which is a very large kitchen that we host the community dinners at. There's also a guest room off of that kitchen and a guest bathroom. And then on the bottom, there is another studio flat, which has its own entrance, has its own kitchen and laundry, and is also kind of fully contained. And similar to the other side, in the back of this one, there is also an ADU that is fully contained and can operate on its own and doesn't really need to use any of the common kitchen space. So
Okay.
very
So,
different, multiple styles, right?
So this building with the ADU in the back ends up to be 4 units here
That's
and
right.
6 units here.
That's right.
With 1 in the back.
Yes, 1 in the back, the other one also 1 in the back. Yep.
And if it was just 2 lots, given the chance for ADUs, how many units would you be able to build on this if Frolic didn't do what it did?
Well, I mean, typically I would think it'd be 2 single-family units, and they could, do the ADUs. It must be 2 ADUs per lot, I'm guessing, in Seattle. And so they could do that and have 3 potentially, and 3 on the other side. But with the kitchenettes, they're able to squeeze in, 10 total.
And what is the average price of a unit here? The average
So the
price
units,
and size.
yeah, so I would say that the price ranges from 170 to 170 to 625. And maybe on average it's about 600 square foot or so, $600 per square foot. And they range from, the studios, which I think is like 300 square feet or so, to the largest ADU is, I want to say, maybe like 1,100 square feet or so.
And what is the average price in the neighborhood? When I did a search on like 600 square foot up to like 750, I was getting feedback like 560. In your studies, what did you find the average price of, a comparable unit in this area?
Yeah, I think similar. What I was hearing from my friend who does construction is he was saying that it was like $500-600 per square foot. So I think this is a bit higher in terms of the 600-ish because you have that common space that, you know, folks are also going to be contributing towards. But it's not that much higher, I would say. It seems fairly comparable, but a bit more for that common space that you're also buying.
Got it. Okay. And can you talk about the community space and the size of it, and also what's the parking availability?
Yeah, so common space available is about 1,500 square feet, and that would be the full kitchen on the east side, the guest bathroom and guest bedroom on that side as well. And then you also have the cafe on the west side. The rooftops are both private and common space, which is interesting. So the top units kind of own a piece of that balcony space, but then the rest is also, kind of shared space. So total, there's about 1,500 square feet of common space. You can see the car in the picture here. There's two spaces right there that we are using more for like loading and unloading as well as EV charging. But there are two parking spots kind of right here. And nearby, there's plenty of street parking. So that hasn't been much of an issue in terms of parking availability, but it is a bit far for some folks to walk. It might be like a block for, you know, us to walk into up this hill to get to our units, but really not that bad at all.
And how's the access? I mean, with only 2 parking spaces and street parking, how's the access to public transportation?
Yeah, so we are really close to the light rail. That's about a 7 or so minute walk. So very, you know, close to us. And then we also have bus routes because we're right off MLK. That's pretty easy to access as well. So yeah, public transportation, I would say is really good for this location.
Great. Let's talk a little bit about the legal side. How would you compare Corvidae to, say, a regular condo or a co-housing unit?
Yeah, so we are structured as a housing cooperative, and it is a limited equity housing cooperative. Um, and so we have, you know, the co-op that we all have a membership in. Each of the owners has a membership in that co-op structure. And we also have an occupancy agreement for our units. So we are, you know, tied to our unit with that occupancy agreement. And the membership in the co-op allows you to then occupy a unit. And we are, you know, we have bylaws, and in those bylaws we have, you know, different restrictions on sales price so that we can keep this an affordable place to live. We have some of those restrictions. There's information about that kind of resale price calculation at a 3% limited equity increase. And we also have in our financing and kind of our structure, our co-op had taken out loans to build the project. So we have construction loans, and as the units get sold, those get paid off. And whatever is remaining after units are sold, there's still going to be some debt, and those then get converted into a permanent financing. And so within our co-op dues, we'll pay those off and you know, cover that over time. And so that is how that financing came together. I'm not part of Frolic, so the nonprofit that put this together is Frolic. I'm not part of their team, so I'm not going to speak for them, but that's my understanding of, you know, how they were able to finance the project. Some of that debt we still hold on to, and we pay over time in our co-op fees.
And so what are those fees like, if you don't mind sharing that with us?
Yeah, the fees are proportional to the size of our units. So you know, we have some units that are 300-ish square feet all the way up to 1,100 or so. And so the co-op fees range from $900 to $1,500. So, you know, not small fees, especially if you got a mortgage for your unit. They're not small fees, but they do cover a lot of things. So they cover, like I said, some of that debt that the co-op holds, as well as the operating expenses. So utilities, our commercial insurance for the co-op, what did I say? Like internet, and even some money is put aside for like future repairs and maintenance. So building some of that kind of emergency fund up as well. So yeah, it isn't a small fee, but it does cover a lot. And when I actually talked to the different owners, I asked, you know, are you paying more now than you did before, or are you paying less? And the majority of them said, oh, we're actually paying less in, you know, all these other expenses than we had been before, which is kind of surprising.
Is that because as they sell more units and get more people in, the common fees start to decrease?
No, so those don't decrease. And some of that is because we had a brand new build and we don't really know what the property tax is going to be like. And so I think the team, you know, said, hey, let's put aside some money and maybe put aside more than we might need, because we know that there's going to be this property tax. We know that we still need to cover property management, insurance, all of these things, and also that future repair and maintenance costs. So I don't see the co-op fee going down unless we've built up, you know, a decent amount of funds to cover some of those. I don't think that they would come down anytime soon.
Pat,
So
really quick? I'm
Go
sorry, we
ahead.
have a raised hand, and I was just curious if you wanted to take, it could be a question right now from Case, or if you want to wait a moment. Just want to let you know.
I think, yeah, why don't we go ahead and do that? Case, go ahead.
Okay. Case, are
Great.
you? There
Thank you very much. Can you hear me okay?
Yes.
Yeah.
Great. Well, this is a wonderful presentation. Congratulations on this. First of all, this is the plan. These are all built already. Is that right, what we're seeing here?
That's right. Yes.
Okay. And then we, at the Port Townsend Eco Village, we explored the possibility of becoming a limited equity housing cooperative. That was actually about 24 years ago. And at the time, we were told that the only way we could get a mortgage was through the National Co-op Bank. So I'm curious, is that where you got your loan, number one? Number two, we learned at that time that the National Co-op Bank had mortgages that were 1% higher in interest rate than a standard mortgage. And number three, we were told that if we were going to try to do a limited equity co-op, they wouldn't fund us at all. So I'm just curious as to how you went through that and what you've learned.
Good.
Yeah. So
So let's
Right.
go ahead and talk about the financing piece then.
Yeah. So in terms of the lending, so we did personally go with National Co-op Bank, and there were two lenders that folks pretty much had an option of in this project. So National Co-op Bank we did go with because they had a better rate. I would say that their rate probably was a bit higher than the standard, you know, mortgage rate, because we were doing a co-op share loan that is, you know, a bit different than the just regular purchase. And so we did go with them. We were able to do the limited equity, you know, structure. And I don't know if that was due to changes in, you know, how things have been in the last 24 years, or if it was also because of Frolic's engagement with them and really trying to partner with them and get that financing established. But we were able to go through that process and it was pretty smooth and very similar to a typical transaction, because we bought a house in, you know, several years ago and it was not anything very different from that. I will say that there is another local lender that Frolic established relationships with and got on board as a lender for the project, and that's Verity Credit Union. And so they're, you know, a local player versus NCB, but they were able to also offer, you know, some options for share loans, cooperative share loans. And the nice thing about them, and I think a lot of folks here actually use them because they had a lower requirement for down payments. So I think it might have been maybe down to like 3% down payment that they were able to accept. So they were, you know, definitely used. And I think because that was the first time Verity was lending on this type of project, there were some kinks that had to get worked out in terms of the process and application, and just that whole thing wasn't done yet. And so I think we were a bit of the guinea pigs to get that set up. But I think since that's been set up, it's been a lot smoother in terms of getting those transactions done. And Verity is actually working on, they're lending on another project in Seattle. It's called ULEX. And I'll put the link in the chat, but they're also doing it as a cooperative. And I think there's like 100 something units in that project. So it's a very large project, and Verity's I think the main lender on that. So yeah, does that answer all your questions, Kate?
Yeah, it does. I'm delighted that those changes, that the banks are now more open to that.
Yeah, and Frolic's been doing a great job in terms of really trying to establish those partnerships. They've, you know, the different banks have come on site, toured the property, and we're really engaged and really interested in what they're doing and their model. So I think, you know, Frolic is really trying to establish that ecosystem that can help support more of these types of projects.
So, how do you compare those terms and rates to market rate mortgages?
Yeah, Case earlier was mentioning about a percentage difference. I don't know if it was that much of a difference for us, but I think there was probably a bit of a, you know, higher markup on it. The thing that was nice for us in our experience, NCB actually, you know, gave us a rate. I think it was like 6.75 at the time. And then they came back and they said, oh, actually, we could reduce your rate a bit. And so that was just proactively super nice for them to do that for us. And I think the market was, you know, fluctuating with some of the interest rate changes. So it was a bit of a flux, but I think it was a bit higher. I don't know if it was as much as a percentage higher than typical, but probably less than 1% or so.
So another question that I had for you, Hoa, is that you know, some condominiums, they have to really pay close attention to improving the building over time or fixing major problems. How is that handled at Frolic?
Yeah,
Frolic?
so right now, you know, we're a brand new building, right? So there's all these warranties that are still in place, which is really nice. But that also means that we, you know, when we have maintenance requests, we kind of have to go through, we have a property management company that manages the finances here. And so they help us coordinate with the different vendors to get folks to, you know, do maintenance requests. And so we're kind of working out the kinks through that process of just requesting help and figuring out, hey, is this a co-op thing? Is it my personal thing that I'm paying for? You know, how does this all work? We're kind of starting to understand how it all works, but we do go through a property management company that helps coordinate all of that. And over time, you know, we do expect there to be repairs needed, but it's a brand new build, so hopefully there's not a lot in the near term. But we have a pool of funds that we're putting, you know, money into, so that when there are major repairs needed, we're not asking everybody to shell out thousands of dollars to cover that.
The other question that I had was, you have an investor pool, and how long will those investors be with the project? Is there a way to buy them out so that you can basically own the co-op?
Yeah, so that's a good question for Frolic. I don't know the answer to that because I understand that, we have various loans. There, I don't know how much investors contributed to this specific project. And I understand that, the construction loans that were used will be paid off and convert to permanent financing. I don't know at what point investors would be, paid off in what order. And I'm not sure who would have been those investors in this project. So, yeah, I don't have a good answer for you on that.
Okay, you mentioned there's like a 3% restriction on when you sell. Is that a
That's right.
3% per year?
That's right. Yeah, it's
What are some
3% restriction per year. Though, if you make major capital improvements to your units, you can kind of try to recoup that and say, hey, I put in this much money for this thing. When I sell, I want to add that into the price because, I had that contribution to the unit. So that is something that you can do so that, folks aren't deterred from making improvements. But it is a 3% increase limit annually.
And how does that compare to normal gains in the marketplace?
In terms of percentage, I don't know, but I mean, I'm sure the Seattle housing market is crazy, and I don't think 3% is anywhere close to some of the increases I've seen, at least in these last years. So I would say that, you're definitely not living here as an investment. It's not something that you're going to make money off of in terms of that equity increase. I think it's decent because, Frolic still wants people to be able to build equity and, have home ownership as something that can support them and help them. But it's not a big kind of return that you're going to expect.
I see. So, how difficult do you anticipate if you wanted to move to another place? How
Mhm.
difficult do you see being able to sell your unit and move on?
Well, when I think about other projects, and I talked to my husband about this, I feel like when I see other co-housing projects that are established, there's often wait lists. And it seems like there's definitely an interest in co-housing and folks want to live in it. The ones that know about it want to live in it, and the ones who've seen it work and see the community function well want to live in it. And I think about that. And, we have 3 units that are kind of pending right now, and they've been on the market for some time. So I think about, okay, why haven't some of these units sold quite yet? Some of it I think is the pricing might have been high because it's the larger units, or it's because of income restrictions and your buyer pool is more narrow. So I think there's that, but then also we're a brand new community. Like, we aren't fully established. Like, people can't see that we're working super well yet because it's not functioning that way yet. It's just so new. So I think there's a few things going on that could make it easy to sell, but I think it's also too early to sell. I think hopefully by the time, we think about, hey, maybe, we need more space or whatever the reason is that we'd want to leave. We'd be more established and there would be more interest in buying, a bit of a larger unit. I think that it's interesting how their resale process is because in their system, they kind of have different wait lists, right? If we want to sell, we can say, hey, we think that, we have these contacts. Let's go to them and see if they want to purchase this unit or not. And if our personal contacts don't want to, then we would open it up to the community and say, hey, these folks want to sell their unit. Do you guys know of anyone who would want to buy? You guys would then have next dibs. And if no one is interested there, or at least is not, committed in the 2 weeks that you have, then it goes to Frolic's kind of wait list to see, hey, there's a unit. Do you guys in this, you know, wait list want to buy. And then after that, it would go to the open market. So there's a process. And I think Frolic's waitlist helps in, you know, trying to make sure that people who align with that idea of community living get dibs, you know, higher priority than the open market. I think that helps. But I think, I don't know, there's a lot that I think about because I think the people who know about co-housing are looking for places, but then a lot of the states don't know about co-housing, right? Just typical, just regular people who aren't into the intentional community scene. They don't know anything about this. So it's teaching people about it. Because when I tell people, my friends about this, they're like, oh, what is that? Like, that sounds really cool, but they have no idea what it is. So I think there's a lot of education still that needs to be done for the broader public. That was a very long way to answer your question.
Very good. I'd like to learn a little bit more about what can you do with your unit. Let's say that you get transferred to Hawaii, and you don't want to sell your unit because it's just a temporary move for you and you want to come back. Can you rent your unit out?
Yeah, so our current bylaws restrict rentals and time sharing. And that's not to say that we'll always have that. We might lift that restriction, but for the time being, you know, the focus is really on affordable housing, and people really want to be able to, Frolic really wants to be able to, you know, say, hey, we are helping people into home ownership, and they don't want people to then be able to just rent their unit. And so I think, you know, for now, that's the understanding, and people know that it is meant to be a primary residence. You're not meant to sublet it. You're not allowed to sublet it. You're even like Airbnb, you're not supposed to be doing that. Our bylaws say that that's not acceptable. I could see a future where that changes, but I think for the near future, it's really meant to be your primary residence.
Yes. Talk to us a little bit about the operational challenges. Like, there's, I think your units shares a kitchen with another unit, but then I see the 4 units on the west building. It looks like 4 units share one kitchen. How is that going?
Yeah, and I see a question in the chat about organizing, so maybe I'll just answer that as well. But in terms of the memberships here, the people involved here, we do have committees and subcommittees. We're actually not subcommittees even yet. We just have committees at this point, and we're still trying to put all these structures together. And I think one challenge is that because the focus has been more around affordable housing versus community living, there's just, I think people have less capacity to get involved and, you know, do community things like committee work. Like, folks are really busy. I think we have 3 single moms that live here, and like, people are just busy. And so we do have committees that we try to organize. We have community meals that, you know, folks cook. And we also have cleaning schedules. But there is definitely a challenge in that, you know, I think the pitch of the project was more on housing and affordability than the community aspect, though community is definitely a part of the goal. And so I think that's one challenge, just, you know, the different focuses that people might have and capacity to engage. I think everybody wants to engage, but it's just, you know, the reality of everybody's busy lives. It's hard to do that. And so we have these committees that we're trying to do things. Cleaning and cooking is definitely, you know, some of the, I think, more consistent struggles because of the busy schedules, and then also because of the shared spaces. So you were talking about on the west side here, there are 4 units with kitchenettes each, but they have that kind of kitchen that they can all share and work towards. And so there wasn't, I don't believe, any sort of kind of what do you call it? Not a mapping, but like a pairing process where, hey, people who have similar expectations around cleaning and just how they like things organized. Like, I don't think there was any sort of pairing of folks. And so you have people coming in who, you know, different than a community-led project where people know each other and they have established these relationships and can work through conflict maybe a bit more easily. You have people who are really new to each other and they're trying to figure this out, and things come up, and it's just without that relationship kind of built and with a strong foundation, it's I think just a bit harder, and we need a bit more hand holding in terms of, hey, how do we talk through this thing in terms of cooking and cleaning and, you know, expectations. And so I would say that that's some of the challenge. And Frolic does try to bring in people and resources to help us have that discussion. But we're all just learning and kind of working through that as we go.
Great. We can open it up to questions, and while we're going through those questions, right offhand, what would you say is the top 1 or 2 pros of Corvidae as opposed to other condominium projects, for example, in terms of, and you can touch on either the architecture, the legal, the financial, or operations?
Versus others. Yeah, I mean, for me, I think I really liked the idea of a co-op structure, and I think it has its pros in terms of, you know, having more community-oriented bylaws versus an HOA might. I think there were, for me, also surprises in how the co-op model works in reality versus how I thought it would work. It may be a different type of co-op model. So I think there's some benefits to this kind of structure of co-op, but I think there could be other ways of structuring the co-op that might be easier. For example, if I wanted to switch units with someone in this structure, I would have to do a financial transaction to switch units and kind of own that other unit versus just being like, hey, I'm going to pay, you know, the amount that's associated with this unit versus that one. And that's a fluid thing versus like, I have a mortgage specifically for this unit and I'm tied to that. So that share loan thing is interesting. And I mean, that's how I think financially we're able to make it work. But I think there might be more creative ways to approach that.
So are you saying that the portability of your space is not quite what you expected?
Yeah, that's right. I thought it was, you know, if we had membership in the co-op, we could live in different units potentially if I find that I need a bigger space or a smaller space, and that change would be more fluid and easy. But in how we finance the units, it's different, and how our bylaws are structured, it's a bit more rigid.
I see. By the way, what did you say the routine meetings occur? I mean, like, do you have like at least weekly dinners together, or what's that routine like?
Yeah, so we have dinners twice a week together. And so we have that, folks sign up for the meals that they can cook. And we do that twice a week. Our meetings, we used to have weekly, and I think folks just got burnt out, like it was too much. And now we're doing every 2 weeks. So that's a cadence we have to just try to get these systems in place because we're so new, and all of us are new to this, except I think 1 or 2 have experience in co-housing or co-living. So yeah, it's pretty regular, I would say. And we, you know, and Frolic really encouraged us to have common meals together so that we could build those relationships faster. And I think it's been helpful just to break bread with folks.
Mm-hmm. Case, you have a question?
Yeah, I did. Thanks. If someone were going to try to change a community from like our eco village, from an HOA to a co-op, given your experience of how you worked with banks and how you set yours up, do you think that that's a possibility? And maybe tied to that, when did you actually become a co-op as opposed to some other entity doing the development?
Yeah, so what I understand is the entity that bought this project was Corvidae. They were an LLC, and the LLC is selling, like there's multiple entities going on. So the LLC, I think, is selling the units, and we then have membership into this nonprofit housing cooperative. And so there is there is that development entity, and then there is the housing co-op entity. And to your question of how would you go from HOA to co-op, I wouldn't be the best person to answer this, but I would think that if you can get a loan, a co-op share loan on the units at the Eco Village, then that would so that's the mortgage part. That would buy out the mortgage side of things. But yeah, I don't know how you would convert the legal structure to a co-op. You'd have to talk to a lawyer. I don't feel like that would be impossible to do. That seems like it's a doable thing. I was thinking more of the financial constraints potentially, but if you have a share co-op share loan that can buy out the mortgage, then it doesn't seem like an issue.
And can we see your legal documents online? Are those available?
I don't think those are available. And what Frolic is trying to do is they're trying to build that kind of ecosystem and the different puzzle pieces of the, how their model works. And so I think, and Mike from the PL community might be able to speak to this, but I think Frolic is open to kind of doing a small cohort of communities that want to explore this and kind of consult on that. But I think their ultimate goal is to be able to sell different pieces of their model so that any person, developer, community can, look at that piece of the model that they're interested in and try to implement that.
Great, thank you.
Mike.
Yeah, Case, I've been talking with Josh over at Frolic. I may be speaking out of school here, but I've been encouraging him to give up on architecture and start a franchise business where he franchises his legal and financial stack that caused Corvidae to happen.
That would be
I'm not
great.
sure he's totally turned off to that idea, but if he could develop such a thing, it would be really cool. He's agreed to meet with me next week to discuss, how that might be, whether he'd give classes or, as Case was saying, share his legal or whatever. So that's in discussion, but Josh is really busy right now. So I'm not sure if he wants to take time out of his day job to put together a group of people to, basically franchise his model. I hope he does, but we'll find out.
Okay, any other questions?
There was a hand raised earlier. Oh, there's another hand raised now. Feel free to, if whoever had their hand raised earlier, then put it down. If you still have that question, go ahead and raise it. But we have, is it Keela?
Kayala, thanks. Yeah, I was sharing a few different things in the chat, but the one that I'm imagining as far as the culture of the community, in while it was set for in the bylaws, but you also have the policy level where you get to grow the community culture. And it just seems like my from this intentional community background and eco-village space that I'm coming from, I could see how important it would be to try and grow that culture, among the membership. But I'm also developing a housing cooperative at the moment myself, and I'm working with the Northwest Cooperative Development Center. And so I have a background in sociocratic governance structure as well. So we're, implementing that. So I think there's definitely some challenges that you'll be facing, but the opportunities that are there in terms of having some circles or some structure that's, not just committee meeting type things when people don't have enough time, but just working groups and engagement, that still has that, the pro-social side as well. So that's another piece of the facilitative work that I do with communities. But anyway, really inspired about your project. I have kind of some more questions about this as we go, but it's really nice to get to to meet you and see your presentation. Thanks.
You. Yeah, and I would say one of the challenges that we have in terms of building the culture is also just the size. Like we're only 10 units, right? And we still have 3 that are kind of under contract and pending. And so that means we have 7 units and 6 are really engaged. So that's tough to try to have, 6 households doing committee stuff when it's, it's a lot more effort to help coordinate some of the things. But we are trying to do game nights now and just get people together outside of work stuff, like committee work or circle stuff. So I think that helps, but it's still really new. So it'll get better.
Are you saying, Hoa, that there's a critical mass that is missing in a 10-unit project?
Yeah, and I don't know if it's when we reach the 10, if that would be enough critical mass, but I mean, at 6 or 7 right now, it's still tough, right? And like I said, there's like 3 single moms, right? So just imagine the capacity that they have, and that's half of the community right there at this time. So I think there is some sort of critical mass that is needed for things to, be a bit stronger. But I think when we get all the other units filled, I think it'll help a lot in terms of having more of that community piece.
Mm-hmm. Case, are you still online?
Yes, I'm still here.
Case, what do you feel is the critical mass that you need to run your project?
Well, that's a very good question. Hold on, let me turn on my video a sec so I can be totally present. We have about 32 adults and 10 children. I've heard that the ideal, quote, community size is perhaps not much larger than, say, 60 members. Some people say 50. I think 32 is nice from a financial point of view. We're doing very well with the number that we have. We have 1, 2, 3, 4 rental spaces, which means that we have that economic diversity and that we have a number of families who aren't able and are willing to buy in yet. And I think that's what allows us to have as many children as we have. We also have some spaces that someone who owns a tiny home can lease. So that's a little more of a financial investment, but not full lot or home ownership. And then we have the final level, which is owning a lot and a home. And currently we have a house that's for sale for $579,000. And that's a 4,000 square foot lot, a 1,200 square foot dwelling. And with that, you also are a 1/12 owner of the common 6 acres that we have, including a 2,200 square foot common house, a common shop, common well, garden shed, garden space. So, of course, it's probably a little cheaper to live out here in Port Townsend than Seattle, but it's getting to be expensive here as well.
Mm-hmm.
The only reason I think that what we have is the ideal number is because we're fully built out and I'm not moving anywhere.
Very good. Kiala, if I might ask, have you had any experience in terms of getting to critical mass for projects that you're involved in?
As far as the, in the eco village scale, or I was thinking about that, in the scale of having only 10 units or 10 total members, as far as the community glue or critical size for community culture. And I would imagine that there might need to be like more of a neighborhood integration level that ties more of the cultural context. And some of the contexts that I see are communities that also host events with others as well, which is a kind of common pattern of eco-villages and intentional communities where, there's a certain amount of hosting within the common house, workshops and that sort of thing. And then you get into the community glue, but also in the context of shared purpose or, or shared practices, that complement the idea of having shared place. Because the shared place identity is important to anchor and have that feeling, but then having shared practices and expressions of purpose and so on are complements to that. So that's where I see it succeeding the most, is when there's more of the stacked shared function and purpose there. So, yeah.
Mm-hmm.
I did have your comment or question, if I may.
Please.
Early on, one of your designs mentioned something about kitchenettes versus kitchens. And I wondered if you had considered putting kitchenettes in all of those units, in, say, I think the left-hand complex that didn't have the full sort of common space, but had a shared kitchen. I was wondering what you thought of the idea of putting kitchenettes in those units and not having a laundry facility there and having that all over in the second building. At the Eco Village, we have 3 laundry stations and nobody has a laundry in their facility. And so we all have to schlep our laundry outside in the freezing weather or the rain, but it works. And it's, I mean, when you think of how little a washer dryer gets used, it can be a real savings in terms of both space and initial cost.
Yeah, so on the side with the 4 units sharing the kitchen, they all do have kitchenettes. So they all have a little sink, they have cabinets and drawers, so they could potentially cook in their own units. I would say that the venting is not that great. We have a lot of windows, so folks can open windows, but it's cold and snowing outside. So the venting, if that was better, I think for us, like in our unit, we could cook in here if the venting was better. So I think there's some of that that could be improved, but there are kitchenettes. And so we could, use our air fryer and toaster oven, and that helps. We do have the shared laundry in both main buildings. And yeah, I think it's a nice luxury to just have to walk downstairs to use it versus go outside and cross the courtyard. But yeah, it could make that space bigger on the side with more unit sharing, because that side has 4 units sharing and it's a smaller kitchen than our side, which is larger and hosts the community dinners. So I think there are some design things that can change. It's just really nice to not have to walk outside for laundry. And I saw your question, Kiala, on the chat. So we do have our own bylaws. I would think that Frolic has sort of a template that they would use going forward and change kind of key information about the lending, and who's providing the loans and that kind of stuff. But it is specific to Corvidae in our project.
Well, I need to go. Thank you so much. Wonderful presentation, great project, and congratulations. And I may send an email to get more information.
Sounds
Great.
good. Thank you.
Thanks for attending.
Thank you, Case.
Yeah. Take care. Bye, everyone.
Thanks,
Okay.
everyone.
Are there any other final questions as we wrap up this evening? We can go till 8:30 with Q&A. We can drop it at 8:15, which it is now. It's up to you all.
Do you have your eye on any other emerging projects in the Seattle area? I know that I saw that Frolic has other projects on their website, but it doesn't seem like they're anywhere to be done yet.
Yeah,
But beyond
I
what
think they have a couple in the works right now. So in the Central District, I think they have one under construction. They're assessing other ones. I think they have one in California that they are also further along on. So they have several in the pipeline, and I think their wait list is now like 70 or 80 homeowners that want to do this. So that's why they're certainly trying to build the ecosystem and kind of the tools to get this done versus them do all the projects. So there are several that are kind of going on. And if you go to their website, frolic.community, I think, you probably could see some of those other projects. Jane?
Hey there.
Hi.
I was just really curious to hear about, you were saying that the original sort of intention of this community was affordable housing. And as someone that's lived in community for a long time, I can't even imagine any project where anybody is sharing anything and not having some kind of like system for engaging with the inevitable conflict and stuff that comes up from that. And so I'm just curious how like you foresee going forward how to sort of like bridge those models of like, it's like maybe this is like community light kind of a situation, but like obviously, you know, tensions arise. And do you see that as being sort of like handled by individuals seeking outside support, or that eventually there might be some type of structure for catching and tending those things that come up?
Yeah, so we're the first project that Frolic has built. So we're kind of the guinea pigs. And I would say that there's probably a lot of learnings that the team has had since, our project has been up and running. And I think they, as part of their role in helping our community, they've been really involved in trying to bring on support and resources. I don't think that is something they can do for all projects because it's just too much. But I think they are trying to get that kind of ecosystem and partners in place so that if we need, someone to come talk to the community and help us have a discussion, we can have some go-to folks to lean on. So I think they're trying to build that. I think in any community, even established co-housing communities, like you bring in professionals who know how to deal with conflict and work through that. I think it's just tough for regular folks to do if you don't have that background. So I don't think that it is something that we would personally like try to resolve ourselves without help, because I don't know how well that would go. So I think, and I hope that Frolic is kind of, setting up some of those professionals to pull in, but we are really the guinea pigs and they're learning as they go and as they see how our project unfolds. But in terms of like how it's pitched, I think for them, Frolic wasn't sure how much folks here wanted community. And so I think for them, there was also an open question like, hey, do we say this is a community project or not? Like how into that are folks? And I think they do try to, they did talk to everybody and tried to see if community living was a good fit. But I think they were still unsure how much we as a community wanted to act like a community.
Got it. And then one other question I had is just, can anybody buy your units, or is there some type of process that you like see yourselves going through, either that you're doing now, or you see in the future that you might actually want to like have some type of say in who joins?
Yeah, there is a process in that, well, I didn't mention it earlier, but some units are subsidized and income restricted. So there is a stringent like process around that application and making sure that the income requirements are met and all of that. So there's that process. But then once, someone's vetted for those restrictions, if needed, they do talk to someone in the community and just ask questions about the community and living. And that is a chance for people to ask questions to see if this is a good fit. I mean, we do have bylaws that I think we could point to say, hey, we don't know that this is a good fit. But I don't know with fair housing laws how much we can lean into that. I mean, there was a lawyer involved in constructing the bylaws to make sure that we could use them, but I think it's very much encouraged to be a self-selection process to say, hey, let's share as much information as we can about the expectations. And if folks don't align to that, then, they probably know it's not a good fit and they can step back. But I don't know at what point we would be like legally, hey, you're not following these things. You shouldn't be part of the community. Yeah, Mike.
Yeah, when I visited a while back, there were still 2 units for sale. Have you guys sold those?
One is about to close really soon. The other one will close in a couple months. And then one is also pending. So they're all pending at this point. And hopefully we'll have at least one new household real soon.
Great.
I have a question for Michael. Michael, as you're getting close to getting your entitlements together, does this look like a model that would work for you? And you might give us like a 30-second about your Polestar Village.
You bet. Yeah, I'm very, just want to say congratulations on getting this project this far. It takes a lot of courage to bite that off and jump into it and try the community living, model. And no doubt it will be challenging, but also very fruitful. So, yeah, great work. I'm interested in that, Pat, and that's part of why I'm here. We have a large we call it an intentional neighborhood we're building in Fort Collins. And it's a very different model than this, but it could support within it some of these kind of development ideas. And we're having that same shift here that's happening everywhere around, in Fort Collins, they had this U+2 law where you couldn't have more than 3 unrelated people in one house. They just threw that out the window, and now they're throwing out parking minimums. Unfortunately, we're just completing our development project process, so we weren't able to take advantage of some of the very recent changes. But to answer your question, Pat, that's kind of why I'm here, is to look at how some of our projects, which are not built yet, could be adapted to take advantage of this kind of approach, where you're using, what did you call it, secondary kitchens, which are quasi-legal, and I'm not sure how our building department would roll with that. And especially what is very impressive is that you guys have figured out some of the banking on all this, that you can get loans for this. It's amazing. So to me, it's all very encouraging what you're doing. And I am keen to see how it might fit in Polestar Village. So definitely why I'm here.
Great. Thanks for that feedback.
You bet.
All right, Sarah, I think we're kind of winding down here, and we're about 7 minutes to go.
Thank
Well,
you.
thank you so much for carving out time.
Yes, yeah, no problem. Happy to answer questions if I can. Like I said, I'm not part of Frolic, but at least have the lived experience here, so can answer some questions. But I'm gonna go put my toddler to bed. Have a good evening, everybody.
Okay, thanks again, Hoa.
Take care.
Thank you for sharing. Thank you all.
Thank you.
And thank you, Pat, for organizing and helping bring tonight together. I think this is such valuable information. Thank you so much for everyone who showed up. And if you aren't already, you do receive a newsletter. Great. Some of you might have joined from the Zoom letter on meetup.com, but I highly suggest if you aren't to get on the NICA newsletter directly. I've been meaning to put this in the chat. There is a suggested donation for these things on the NICA website, which I just put in the chat. You can also sign up for a newsletter there. It's not required to attend these to pay, but we are a nonprofit and it does take volunteer effort on the behalf of Pat and Hoa and the future presenters and the board for pulling these things together. So thank you so much for being here. If you have any questions or suggestions for future months, I would love to hear what you are interested in learning. Clearly, the financial and legal is a huge topic in this conversation right now, especially. So email us info@northwestcommunities.org or com. Just send it on the website. I'll get it. If you have any questions, concerns, and if there's nothing else, I will see you all next month. Date TBD. So have a great rest of your February, everyone. Thank you for joining. I'll see you all next time.
Thanks, Sarah. Thanks, Pat. Good night.
Good night.